Well, premium volume over a long period of time tends to track with GDP growth. Obviously, the economy around the world is in the aggregate somewhat stagnant, so that creates some challenges. However, there are a lot of uninsured risks around the world, and as markets and economies are developing, business is looking to insure those risks more than ever before. So we're seeing growth in emerging markets. We're also seeing at AIG growth from new products that we've introduced to the market, new capabilities that we've brought to many markets around the world. So while the economy remains challenging, we do see opportunities for growth in the market as we move forward. Well, we're certainly not planning on a hard market. We don't plan around those things. What I've certainly observed over the last several years is really flatter, shorter market cycles than what we've seen over longer periods of time in our industry. And I think there are a lot of different factors at play. I think capital moves in more quickly than ever before, and I also think management's getting smarter about managing information. Underwriting is improving, risk selection tools are better than they've ever been before. So what our focus is on improving our underwriting capabilities, differentiating ourselves as a market. I do see, again, I think different kinds of cycles emerging as we go forward, and I think that's a good thing for our customers. But our focus again is on building a better product and a more sustainable product. So I think that's good news for the market overall. At AIG, we're making big investments in both people and technology. We see an opportunity for both right now, and we're making many investments in technology really to better inform our underwriters, to give them better risk selection and pricing tools, bring really the institution's knowledge to their desktop to make them better than they've ever been. So that's an exciting time for us in our history. On the people side, a good example of where we're making big investments in people is in our science office. We founded our chief science office a couple of years ago and have hired over 100 professionals, PhDs, economists, doctors, nurses, a wide array of professionals that can help make us smarter, can help us innovate and deliver better solutions for our customers and for our brokers. So we're making big investments in both, and we think they'll pay off in big returns down the road. Well, I think the industry has changed. The companies within the industry have changed, certainly changed, and have strengthened their risk management capabilities. At AIG, we've invested a lot in our risk management function over the course of the last 5 years. The regulatory environment has also changed as well. It's certainly a more complicated regulatory regime, particularly for a global company like an AIG. We're embracing that new regulation, and I think ultimately our customer and broker ought to feel some comfort in that increased regulation and increased investment in risk management. So I do think the industry has emerged as a better industry as a result of the financial crisis. Well, at AIG, we have the benefit of being a large, global, diversified insurer, right? So there are going to be pockets of economic challenges and economic opportunity all throughout the world at any point in time. So we have that benefit and see lots of opportunity for good, profitable growth for us in many parts of the world. In the Eurozone, while the economy obviously remains challenging, we've benefited a bit from a flight to quality, frankly, and compete with many local companies that are facing capital constraints and other challenges. And so as a result, it's been really, I think, a good time for us in building our business throughout Europe.